I don't want to crash the party, but although we build slightly more units consistently, we do so by building more multi-unit building and with double the workforce. And even then, we barely break historical records and remain under pandemic level constructions. So in other words, having ambition and targeting issues hindering housing supply is good, but the construction industries won't magically build twice more. Hi, this is David Alexandre from CPA Canada. Today we'll talk about housing. This video is a sequel to an article I published in the Pivot magazine. In that article, I argued that Canadians were buying too much home, which was dragging down our overall economy. I happened to publish that article in March 2022 when the housing market peaked. Right after prices started going down in our most expensive housing markets due to rising policy and interest rates. This video will be more critical as I will try to argue that we need to significantly course correct how we approach housing from a public policy perspective. We will go through many points rigorously together, as I'm well aware that housing is almost a religion in Canada. Starting where I left things off in the 2022 article, the housing market in Canada still does not need additional money. If anything, it needs less of it. We remain in the top 5 worldwide from the weight of our household debt on our economy, even if the market has lost ground. The difference is far from trivial. Canada's household debt is almost 1.5 times higher than in the United States, and 1.4 times that of the United Kingdom. It means our economy remains significantly more concentrated around housing and thus more sensitive to interest rate levels. Over time, housing has accounted for a bigger share of household assets and net worth, which has ultimately led us to that infamous top 5 rank. Every decision that we make as a household aggregates in the overall economy and subsequently have implication that we must consider. So that concentration in real estate means that we have invested more into residential construction. The flip side of that is that we've invested relatively less in what I call the productive assets, so machinery, equipment, and intellectual property products. And the comparison with the US on that front is really striking. Ever since the 2008 crisis, residential construction investments have gone down and stayed lower in the United States. Meanwhile, the productive assets have gone up quite significantly. And many argue that this fundamental difference in how our countries invest has something to do with our challenges to improve productivity in Canada. Secondly, I do not think there's much room for additional money or investments into residential construction without creating even more inflation. My reasoning on that front is honestly quite simple. I look at investments levels and price index side by side. When investments level grew significantly during the pandemic, construction prices went up just as much, if not more. And now that investments level have reduced, construction prices are continuing to increase, but at a slower pace that is still far too fast for comfort. Residential construction, however, cannot be analyzed in a silo as there are ample spillovers with non-residential construction. Think building school, hospitals, and even roads to a lesser degree. Looking at the recent years on the non-residential side leads to the same conclusion. Investments level have not gone up significantly, but construction prices have moved up. So it does make the illustration quite clear that more money into construction overall lead to price increases, or in other words, inflation. And it also highlights that the construction industries is working close, if not at capacity, which can be sort of expected for a big country like Canada. The federal housing plan aims at doubling the number of housing units per year. I don't want to crash the party, but although we build slightly more units consistently, we do so by building more multi-unit building and with double the workforce. And even then, we barely break historical records and remain under pandemic level constructions. So in other words, having ambition and targeting issues hindering housing supply is good, but the construction industries won't magically build twice more. And dialing back to my previous point, if we try to incentivize that with substantial money, there are very real inflationary concerns that must be part of the discussion. And I think more importantly, we must design our immigration policy with our construction capabilities in mind, and not the other way around like we did from mid-2022 to mid-2024. Those years were marked by a growth in new household that boosted housing demand twice faster than housing supply. And the result outside of Toronto and Vancouver was a growth in housing prices, which quite frankly was predictable. With 2026 and 2027 characterized by a lack of population growth, we need to look at future immigration target and see where we land in terms of levels of housing construction. And if we do not reach that doubling target, which is very probable, then we must adjust down our immigration targets.